My dear friends, welcome to another episode of the Inevitable Podcast. I'm your host, Pedro Sorrentino. As you know, I'm a VC, I'm an author, entrepreneur. Sometimes I also play the guitar. But anyway, I'm the founder and CEO of Atman, and our mission here is to partner with inevitable people. In this episode, I had the honor of talking to Jeff Williams. Jeff works as the Senior Vice President of Industry Solutions and Strategy at Altvia. Altvia is basically the Rolls-Royce of venture capital software. They're the leading provider of CRM and investor deal management systems, a company that started in 2006 and supports about 40,000 limited partners. Had a chance to meet with Jeff as we were analyzing what CRM we were supposed to buy at Atman. Right now, we are not, as an emerging firm, rolling in Rolls Royces, but I have no question, no doubts that soon we will. But during that process, we had the opportunity to meet each other, and I was so impressed with him, his critical thinking, and honestly, his absolute passion for life and the game of venture. So there aren't that many people in this world where you get excited about geeking out and nerding out about venture. And Jeff is definitely one of those. So, in this episode, we talked about his upbringing in Colorado, the beginning of his career working as an analyst and an associate sourcing and evaluating investment opportunities, and then the last few years as he's been helping build Altvia into the powerhouse that it is today. We also did deep dives into the GP-LP relationships and how all of that is just evolving to a new level. For those that don't know, Jeff also worked at Green Spring Associates, and they are a tier 1 LP, basically considered by many to just be one of the best investors out there that has started investing multiple different funds and now also invests directly. And it was a wonderful conversation. I hope you like it. But Jeff, I just really appreciate you taking the time to be here with us at the Inevitable Podcast. I think that it's the reason why, aside from being the first other podcaster as well with the most professional setup than every single other guest we've ever had in the show, the reason why I extended this invitation to you is because it was very clear to me that you're extremely passionate about what you do, and you like the small details of things, which is precisely how I operate in the types of people that I enjoy partnering with. So thanks for being here, and I'm excited.
Thanks for having me. And thanks for having me. And we're going to do it on my podcast too, so it's going to be a first for both of us. And I'm thrilled, and totally agree. It was clear the first time we met that we had like-minded viewpoints, and so hey, I'm always looking to swap notes and get ideas. So love it.
That's
glad
great
to be here.
So I lived in Colorado, right? Grew up in Brazil and Sao Paulo, but lived in Boulder for 3.5 years from when I was 20 until 23. So it was a very different life. Just everyone driving a Subaru, brewing their own beer. Boulder is a very special place in at least it has a very special place in my heart. I'd love to just learn more. How was your childhood? Like, how was it growing up in Colorado? And just before we start talking about venture stuff, like, what's the story of your life?
Yeah. So I'm close to being a Colorado native. I think I was about 5 or 6 when I first moved to Colorado, and so I don't really remember too much else. And now at the age that I am, just turned 40, and I feel much older. But
wow, you don't look 40 at all.
I've now got. Yeah, that's what people say, and yet I feel like I'm 60. I don't get any sort of benefit at all of that in terms of how it feels to wake up as me. But so I've got a couple of young kids, and I think that the thing that I would say about growing up in Colorado is that I didn't get to choose that. That was something that my parents sort of dictated for me. And yet I feel tremendously fortunate, to have done that. I don't think at the time I realized it, but just sort of all the kind of stereotypical things about Colorado, brew your own beer, all that stuff. But the outdoor lifestyle, like having access to the mountains and all that stuff. And I think that, still today, but certainly as I was growing up here, I think that Colorado still has at least enough of the kind of vibe that it was founded upon, right? Which was like, we, sort of take risks. We, go across the sort of whole Midwest, through the mountains to find gold. But we're also sort of, all kind of new here, and it's not home to any of us. And we're, kind of embracing of, other people being here. And so, for me, the story is tremendously fortunate to have grown up here, not having the choice. And so I always felt the need to kind of come back here and start a family, sort of karma-like, to pass that on to my kids. And it was extremely convenient that the technology scene is what it is here, and I think that there's still something about this entrepreneurial spirit and, the way that Colorado was first settled. So it set up very nicely to come home, and kind of get to enjoy still a lot of family that lives here, raise kids here, and also be in a place where, there's a healthy technology ecosystem and all that. So, no place I'd rather be, really. I could do a little bit at this age without the winters, but other than that, we're all set.
That's great. That's great. Yeah, I mean, I lived in Boulder, right, for 3 years. I loved it. It was wonderful. It's when I started my first company, and I learned, and then I joining SendGrid back when Techstars was just a bunker. It was a very different time, and it's Colorado is a really special place. The only reason why I decided to move to Miami versus considering Colorado, actually, are two. But one of them is the winter. I have no problem with the heat, but I just don't like layering up. Never been that big of a fan of all the snow sports, although the nature is spectacular. And Colorado I think it's one of the happiest states as well. People are genuinely happy to live in Colorado, and differently than in California, they don't have an attitude about the fact that they appreciate what they have. So it's a good it's a combination of happiness and humility that I certainly appreciate.
Yeah, no, for sure. And I do enjoy skiing. I grew up skiing. Unfortunately, one of the downsides of the growth in Colorado has been, access to, the reality of skiing, on weekends, for example. I mean, the traffic has just gotten so bad. So I do a little bit less of that, and I agree. I could probably, in the absence of actually skiing, do away with the winter stuff. But yeah, no, it's a great place. People are all, happy to be here. And I think it's great, the growth, right? Even if at the cost of sort of ski traffic and what have you, because, for the most part, we're all new here, right? Even if you grew up here, everybody sort of came here at some point, and the more the merrier. And we've seemed to maintain the culture of, we're all sort of happy to be here, and we're welcoming of others and what have you. So we're here for it.
No, I've had many special moments in Colorado. It was the first time I was offered a term sheet for my first company, where I did all the fuck ups at the same time in a condensed amount of 12 months as a first time founder.
Yeah, and you just never forget that, right? I mean, you always remember where you were in that moment, and the horrifying mistakes that you made and all that, right?
Yeah.
So,
no, but I have one of the most special friends I have in our world of venture capital is one of the founders of this firm called Range Ventures, Adam Burrows, and he's a longtime friend. He used to work at Service Magic, that then merged with Angie's List, became this $7 billion public company. They're the only company to this date to figure out how to make that category profitable. And there have been so many YC startups that failed miserably, and it's the relationship I have with Adam is, I think, one of the most precious ones I have, because we managed to continue to play different games in different chapters of our lives, but with the same values and principles. So, ended up becoming an LP in Range, Also made the introduction for the first family office. They wrote the first large, that first moment when you're raising your fund and you receive one first large check, because he was just kind of like passing the hat along. And now, they've had multiple up rounds, and they are a big believer into the local ecosystem, as older players don't work with the same type of positive violence, if you may, because it's also comfortable in a way, right? And then so competition is always really good, and I think it's wonderful to see what's happening with the ecosystem in Colorado. Have you guys gotten a bunch of people from the pandemic, similar to, because for me, Miami, if you asked me 2 years ago, would you move to Miami? I'm like, yes, but let me know if I should take a Glock or a Colt, because the minute I land here, I'm going to just shoot myself. So it has changed. And, now you do have a contingent of highly ambitious and smart people, probably around, 500 individuals. So different than, the 100,000+ that you have in the Bay Area. But how are things now, with COVID in the Colorado ecosystem?
Yeah, well, I mean, I think there were always people that were moving here, sort of, especially like the early in the career, age. And so, I think that's sort of always been a thing, and it's a big part of the growth that Colorado has seen. But I think that there's been tremendous growth, my understanding at least, in terms of sort of the mountains, right? So actually my wife and I were recently kind of just poking around the market for, a mountain house. And early on, in COVID, I was like, well, we should hold off, because you were hearing these stories about people that were like all levered up, with like 20 Airbnbs, right? Like sort of making a business of owning rental properties. And I suspected that there was going to be this huge sort of, fallout from that, right? Like people weren't coming to stay at those things. And so I was like, we'll just hold off here and wait for, the prices of these things to come down. And total opposite, the prices of Colorado mountain real estate have gone nuts. And my understanding is there's a lot of people that, in the sort of new work from home, sort of environment, were like, hey, let's go to Colorado, and in cases where they're coming like from California markets where they were, selling into very healthy prices, and then we're like, hey, come pay cash in Colorado. So my understanding is there's been tremendous growth like in the mountains and stuff. I think in Denver too. I mean, we've basically at Altvia doubled in terms of headcount even since like the fall of last year. But and so a lot of new people that like have just recently moved to Colorado and stuff like that. So I don't know. It's been kind of odd. It's almost like certainly been a beneficiary of it. But in a way, I think it's like also been a place where people were like, it's a pandemic, whatever. We're still moving to Colorado, So I don't know how much that happens in a lot of places, but maybe it was an excuse for a lot of people that otherwise wouldn't have, that can now work from home and stuff. So I don't know. It's been definitely healthy though.
Yes. Well, I would if without a pandemic, there's no way I would have moved to Miami, because I felt stuck in San Francisco. Still have a place there in Palo Alto for an office and home and so forth, but just the Kent, I couldn't imagine myself leaving because of the network effects. And then suddenly everyone stopped meeting, and then there was everything went online, and you realize that you can actually get a ton done. It's not the same, and it doesn't replace, but this hybrid life certainly is the future. And the decentralization of the ethos of the Bay Area, it's not just happening here; it's happening globally. We continue to see billions of dollars getting poured into the different ecosystems from Southeast Asia to Latin America, and the interest has been tremendous. So, in that sense, I think it's wonderful, and I like the fact as an immigrant that the U.S. offers quite a lot of mobility. I think it's one of the few countries where Any city in the United States with about 50,000 people kind of has the same back end, if you may. There's a Target, there are a few Starbucks, an Italian restaurant, a sushi place. It's a good thing about America in that sense.
Yeah. No, for sure. Well, and to your point, like one of the things that we're talking and hearing and thinking a lot about is it's become so cliche, right? The new normal and all that stuff, but it's also convenient. Cliches are convenient sometimes. So, we've always been really big on sort of how LPs and GPs were going to be interacting together and how technology could facilitate that. And like one of the things that you'd find is that, it's a natural place where people are like, ooh, it's kind of weird, right? To raise big sums of money and not get together. And it was, and it is, for a minute. People will go back to meeting, to your point, right? But in certain cases, LPs have been like, listen, way easier. We can attend 4 annual meetings in one day, and so there's certainly elements that I just don't think that people are ever going back. It's pretty silly to think about the reasons you would jump on a plane and rot
that's right
in a hotel for a couple of days to have one meeting.
It's crazy. In 2019, I went to Brazil 18 times. From California? Ooh. 18 times. Well, I also had aside from the business in Sao Paulo, had a girlfriend as well, so it was a double motivation. But still, it was exhausting in terms of traveling. Although for me as a GP, I'm fortunate to have long-term relationships, having been in the industry for about 7 years. So I have a threshold mentally that depends on the size of the check. This is also for LP money. I want to meet in person. So for this new chapter with Atman is very different. When I started 1VC, if you were not a part of ISIS, Syria, or North Korea, I'll take your money. No problem.
Yeah.
Now it's different.
Well, what a stand-up guy.
You see?
You were. Yeah.
Well, every emerging manager operates that way. It's just a few say it on the record, but it's true.
Totally. And that's why I love you, is because you're willing to say what we're all thinking. And some of us. So I think there's definitely times I'm like, I probably shouldn't have said that, but I tend to err on the side of saying it out loud too as well. And so I'm always a big fan of somebody saying it, what all of us are thinking. So there we go.
Awesome. Well, changing topics a little bit. So there's that moment where you decide, right, where you're going to go to school and what your major is going to be. How is that decision-making process for you? This is,
so that's actually one part of my life that I feel, slightly cheated about, or I guess, I see the way that, especially, in my time at Greenspring and getting to know, GPs, and early on when you're sort of copying and pasting bios, from big, brand name venture firms, there was a lot of damn, how did a 17, 18-year-old have the, vision to put that career path together, even if only on their education. So that wasn't really me. I mean, I think thinking back, it was sort of well, obviously, right? This stuff's important. I wasn't trying to sort of, blow up the scorecard or the grade sheet, whatever. But I don't think I really sort of was that conscious of it, at the time. And so actually one of the bigger kind of motivating factors for me was actually kind of wanting to remove myself a little bit, not necessarily from Colorado, but I went to Cherry Creek High School here in Denver, and that's in many cases a small college, and it's very cliquey and all that, and I loved it, it's a great place to go to high school, but in many cases, most of the students go to Colorado schools, and so it's kind of just high school all over again, and they don't necessarily meet too many people. And so I was actually, the one thing I was thinking was that I didn't want to do that, and so I went to school at the University of Utah, And that for me was like, I think people still are surprised by this. I don't know, it shouldn't be, but that's probably the biggest, like even with CU, I mean, CU is pretty close to Eldora, but like the University of Utah is like 25, 30 minutes away from like Snowbird and Alta. And so it was definitely a situation where like you could be a full-time student if you made your schedule right, and you could also ski, 60, 75 days a year. And so that was sort of a thing for me. And I don't know, I'm a little bit of a contrarian as well. So it was like, do something different, go somewhere else. And take on like a little bit of an adventure, meet new people and stuff like that. So that was kind of really what motivated me. And that's why I say I see the way that people like where they went to undergrad and then business school and stuff like that. And I'm like, wow, I just didn't have that. Like I realize in hindsight now, I wish I had. That's why I say I almost feel cheated. But but it worked out. I think that like everything happens for a reason, and certainly the like series of events, I suppose, that led me to that, and then onward from there were worth something. So I happen to love Salt Lake City. I mean, it's got the rap that it does. But, being a student in Salt Lake City is a totally different experience. And it's just a great place to be, and obviously great skiing and all that stuff. So I loved it.
Yeah. No, I drove through Utah when I was moving from Colorado to California, and I loved it. It was organized, clean, just very functional. I guess I'm still traumatized from the Tenderloin in San Francisco, but basically kind of like and the nature was spectacular. So yes.
Yeah, man, you can basically drive like from the either direction, north to south in Utah, and it's like 5 climates basically. It's wild, and you would also pass like 4 or 5. Incredible national parks.
Exactly.
I don't know what the number is.
Yeah, I wanted to do Utah because of that. We really want to go to Moab these days and just stay there for. I love deserts and I hate Vegas. I think Vegas combines everything I dislike about the United States in one place, 24/7.
Yeah, I love Vegas for like I don't know the first 5 hours. That you're there, and then you're like, oh, you just can't get out of there fast enough. And you're like, why did I even get a hotel room? Next time I'll just get a locker. How long have I been here? Get me out of here type thing. So I feel for you there. Have you ever been to Lake Powell?
I've never been. No. Where is that?
Okay. So here's my my crystal ball tells me that Lake Powell is going to be like, probably not same scale as Tulum, but it's going to be like this new hipster spot. And I say that because I've been seeing and hearing so much about people like, during the pandemic going to Lake Powell, which is a great place to spend, for any reason, but especially during the conditions. And so it is actually, a perfect example of like, like the big part of it's in Utah. And I think people sort of miss that, but it's like it feels like it's Mars. And it's this huge lake, and there's all sorts of different places. You rent a houseboat, you find a little, thing. You never see anybody else for a week, and you're like sort of living on Mars.
It's amazing.
It's amazing. You got to go there sometime.
I will, yeah, for sure. Just 2 days ago, I have had so many friends. I guess I'm friends with a lot of party animals, and then they can't stay that long without, and then Tulum now it's a free land. I've seen some videos, and it's crazy. I think I was always thinking about. I've been to Tulum twice. I was like, how is that possible? Have you ever been?
I have. I've also been twice. Yeah.
So if you think about it from I'm always very curious on how things work from a business standpoint. I've always operated that way as a kid. I think this is why I ended up in venture. But then it's like, how is it functional? Who pays for that? It's just like a little strip. But the whole thing outside of it is all, it's a poor Mexican village. So I definitely think, and then for the most part, they screw you over with credit cards. Everything's cash based. So there's no other explanation for me, but that's a great place for the cartels to launder money.
Totally.
I think, that's, what makes Tulum work.
we haven't talked about this.
No.
And you've literally just said my exact feeling. So my first experience in Tulum, it was probably like 2010, 2011. And do you remember Guild Group?
Yes,
so
of course. Yes,
like the
group buying
Jet Setter
for,
was the sort of
luxury goods.
Yeah. It felt to me like the first flash sale, like private club vibe. You know, it was free. You just didn't invite, whatever. But and then those businesses went on to just print money, and then also just kind of disappear a little bit, like Groupon. We could talk all day about that. But anyway, so my wife at the time, girlfriend, had found like a Tulum Jet Setter deal. And she was like showing me pictures. She's like, "Oh my God, look at this place. It's amazing." And like Tulum is actually off the grid, right? So like, it's like, oh, you're like off the grid. And I think maybe she was, kind of caught up in the sort of allure of that as a marketing term, less, kind of thinking about it literally. And so, yeah, we got there and it was like, oh, like the guy, it was a New Yorker expat, like, he looked like Spicoli from Fast Times at Ridgemont High, like blonde, curly hair surfer from New York.
Yes.
Bought this like mansion on the beach and turned it into bed and breakfast. And he's like, "You cannot use your hairdryer, all this, that, and the other." And it was sort of like, why can't you do that? I'm like, babe, it's off the grid, but it's amazing. Like totally, like what is going on in Tulum to sustain, and like, how did this whole like hipster influencer thing happen? Was it staged? I have so many more questions than answers, unfortunately.
Yes,
for you,
well, I do.
About Tulum.
It's a great point. I do think that this is basically an Instagram mirage where you just fly a bunch of very attractive women and they keep posting pictures, and then it kind of attracts everyone.
Yeah.
And it's I went there with a former girlfriend, and we stayed at this hotel, the Nomad, and I remember having a little bit of a fight with her. I was like, "We're paying this for like a homeless thing? Like what is this tent in the middle of nowhere?" It's basically, I have no problem connecting with nature, but nature and God, they are available 24/7, and it can be free. You don't need to pay a premium for that.
Yeah, you don't have to go to Tulum, turns out. Yeah.
So it's nice, and it is great. What annoyed me, though, is that given how I see my spiritual practices in the spiritual world, every time I see these things getting ultra commercialized, and it's not necessarily cheap. Every time you ask me what's my favorite restaurant in the city of San Francisco, it's Oren Hummus. Because it's consistent, it's the best return over equity that you can possibly find. The service is fantastic, the food is good, and it works for multiple occasions. It's not going to be a Michelin crazy thing, and the amount of money you spend on a regular dinner there, and it's not even the question is not about being able to afford it or not. You and I can pay those checks. That's not the problem. It's just what you get for it, because it's all sprinkled in this Instagram filter of like, oh, I'm going to be Zen and I smell the Palo Santo.
Totally. No, and that's why I vibe with you, Pedro, because you're a little bit of the contrarian too. Yes. It's like, come on. Like, I feel that way a little bit about like the farm to table thing. There's times when I'm like, so I'm not, anti-farm to table, but there are often times when it's like, oh, you have to check out this new, especially Denver, Boulder, right? You got to check out this new farm to table place. And you go there, it's like, this is not good. It's just not good. And so you're paying twice the price, and everyone's like, there's like memes, right? I always imagine that those places are where like the memes where like people are like standing on their booth, like 3 people at once to take a picture of their meal. So I feel you. No, it's like, hey, like sometimes, but I appreciate that some people's definition or interpretation or opinion or whatever of best is wide open, right? So they can have those, but I'm with you, man. It's like, is it really?
Yeah.
the best.
It's interesting.
Restaurants.
It's interesting, and I think that these little parts of the world, they kind of pop up, and then they sustain themselves. It's New Year's Eve parties in Brazil are very similar in that way. So like 4 or 5 very wealthy entertainment groups or individuals will say, we're going to make that beach in the Northeast happen. And New Year's in Brazil is always a very big party, and it's kind of like there's the party.
Yeah, I was just thinking right. That's something I want to do before I die. By the way, I'll swap notes with you. And figure out how to do it.
I will be more than happy to be a phenomenal mentor for you, your wife, family. Like you can have a lot of fun with. You can fly the kids. You can just go as a couple. Like there are just many different ways. And
how long would the flight be? By the way, you said you went 18 times from California. Like how long is that flight?
The fastest flight is connecting through Houston via United, and door to door is about 18 hours. From the minute you get into the Uber in the city of San Francisco all the way into your destination. So, but it's 18, 20 hours for you to be in Sao Paulo. Then you're going to have to fly up again to the northeast of the country, another half a day probably, given check-in and logistics and so forth. So
worth it though. Sorry, I interrupted you. You're saying the New Year's.
Well, no, they do the same thing. For instance, I spent my New Year's in this beach town in the northeast of Brazil called Carneiros, and that place is a complete Instagram flex. And what happened was that it's a very poor city, and the first night I spent, and I would admit it, this no problem at all. About like 15 days, COVID doesn't exist. I was partying and having fun, and didn't catch anything, thankfully, but. The first night there was a party. Second night, police comes in. They shut down the entire thing, but they shut down the city. The city has no infrastructure at all, in any way, shape, or form. So because they bring everything just for these parties, which it might have been how it was in the early days of Tulum. I think that this is the business concept of like how do you make a place happen, right, and make people want to go. It's fascinating.
For sure. And somebody's doing it pretty well in Tulum.
Yes.
Sounds like Brazil too.
I suspect
Let's figure it out.
That it is the cartels because just how the payment mechanisms work there with the lack of connection and ATMs that can't spill out US dollars in the middle of
cash businesses. Yeah.
That's true. And fighting the cartels is much hard. Like they're way better organized than the Taliban or ISIS, right? Or all the white supremacy stuff. Like they run legit business. I mean, it's very illegitimate, but like they got to get their shit together, and it's a combination of like business acumen with military, / terrorist. It's not easy. I think it's horrible. I'm not saying that I'm pro, but if you think about it, in terms of like how are they organized as a business, it's very hard, very hard. So that's why they get shit.
Totally. Well, if they weren't well organized, then we wouldn't be talking about them because they should not be around. So they're clearly doing something right, given that at the end of the day it is illicit activity, and yet they're extremely difficult to bring down. So.
Yes.
No, I hear you.
Imagine if instead of Eric Ries, the lean startup, you had the Escobar method.
Yeah. So, and it probably exists. It's just so closely held because, it's the recipe book everybody wants. So Let's find it.
Well, and then, you coming back to your story, Jeff. So you graduated, and how was the whole process of getting a job at Greenspring? And then for those that don't know, I would say that Greenspring is just like when we were on the first call with you guys at Altvia, we were like, oh, this is the Rolls Royce of venture capital infrastructure, and we are still buying Toyotas. So maybe one day we'll get there.
Yeah.
And then I would say that at least in my interpretation, Greenspring would be considered also almost like the Rolls Royce of limited partners. And there aren't that many that have been doing what they do, the way they do for, 25, 30 years and so forth, because God knows what you had to have in your mind 30 years ago to say, yes, I'm going to start a business that only invests in venture firms. So just learning more about Greenspring, the story and how you ended up there, I think it would be fascinating for our audience.
Yeah, well, it's a wild story. And I mean, the short and sweet of it is when I finished school, I actually didn't go right to Greenspring. I spent some time with my oldest brother, so I was a finance major, and I come from like a hardcore finance family. And
what does that mean?
And I yeah, well, it's, talking about cartel. No, it's like, so my dad is, effectively a financial planner. And my brothers and then so I have two brothers that are also like CFPs. And then, I've got a sister who's like, CPA. So, in a way I sort of felt like, oh yeah, like finance, but also like I was planning when I finished school to go to work with my brother. And so I thought like, it's kind of a finance family. I dig finance. Like I really do. And the cool thing about finance is like trading stocks and things like that. Right. And so I went to work, with my brother, and he, at the time happened to be, living with his family in kind of the greater Baltimore area. So it was one of these jobs. It was effectively like a stockbroker. Right. And so like, you have to pass the Series 7 test. It's so hard. I got like geeked out to the thing, like, and I was super stoked. But ultimately I realized like pretty quickly it was a like a commission draw type thing, right? So like you had to sort of sell all these like investments, and then we went like first 6 months without being paid or something like that, right? And I'm like right out of college. I paid my way through college myself as well. So
awesome.
Like I was bartending at night, and like maybe, well, I guess it was like weekends, 2 weekends or 1 day per weekend, right? And so I was also at that time like being like, this isn't finance, like this is sales, like like everything about like valuation and like whack and all this sort of things that were interesting about finance. It was none of that.
The interests were misaligned because you were getting compensated on fees on whatever you sold, right?
Totally. Yeah, it's really a sales job, right? So like and there's all sorts of regulation and all that stuff, but I didn't feel like at the end of the day your job was like to sell something to somebody, and frankly at times you're sort of like, I don't know if this is the thing, but like I also kind of need to get paid here. So so I was really bartending on weekends to just to sort of have some money, and waiting this out. But I was also very conflicted because it was like, I don't know if this is for me, but also it felt like the name of that game is to like build a sort of clientele, right? And then you're kind of stuck with the clientele, and there was always this conscious thought of like, I want to live in Colorado. I feel like I must raise my children in Colorado, or be sort of met with some terrible fate. So anyways, one night while I was bartending, and it was like a California pizza kitchen that had just opened, so it wasn't like a bar or anything like that, but one of the partners at the time, and still one of the partners, Jim Lim, actually came and sat down at the bar with his wife, and I got to chatting with him, and we sort of hit it off right away. And I was telling him what I was doing, with this sort of stock job, as I'll call it. And he, I could just sort of see, he was like, what, it's really funny. Like, he gave me his card. He was like, we should, talk more sometime, because we're going to be, he told me that he worked in venture capital. And I, knew kind of right away. I'd taken a course my senior year only on venture capital, and I got geeked, and so I was like, ooh, and it's also just like one of those things. It's like, ooh, venture capital. It's very exotic when you don't know much about it and all that stuff. So they were looking to hire an analyst. We, at the time, it wasn't a good fit. They were actually hiring like sort of more kind of finance, accounting type role. But it came back around, and Jim had reached out like 6 months after that, and said like, hey, we're gonna actually go through a process and hire an analyst. And so went through it, got the job. Felt like I was totally out of my league, and it triggered something for me that remains still today, which was like, you really can do, people are capable of amazing things, and especially when they're like motivated by being sort of an underdog, like that was a little bit how I felt. I hadn't gone through the sort of, education path that a lot of, my peers had and stuff like that. And so it just motivated me. But it was super cool. I think it was 2006 at the time. And if I remember correctly, when I went to work there, we had just closed we were in the process of raising our fund 3. And so the total AUM at that time was, around 500, 600 million. Right. And it was a lean team. It was very small. But the thing that was very clear was that Greenspring had access to the elite, upper quartile venture brands that nobody could get access to, especially not fund of funds, And so that was really, what kind of the spark for the business was the access, that they had early on. And, it was just effectively a wildfire because there was so much demand for, access to those brands that, we went on, I was there 4 or 5 years. I think while I was there, we raised, $3 billion in 4 or 5 years, coming off of 500 at the time. And then, today it's like 13 billion. It's just gone, crazy, and all sorts of different strategies. There's now sort of, growth. There was always a late stage direct investment. I'll come back to that and talk a little bit about the technology there. But, it was super cool, man. I mean, it's still one of those things I'm extremely proud to have worked there. It was the place that I think got my brain thinking in certain ways. And then also the place that, kind of led me to like thoughts in my brain colliding that created, kind of why I'm sitting here and what I like to do today and all that sort of stuff. So super cool to have been there at that time. Super proud of.
I love it. You were there for how long?
The opportunity to work there. Well, this is so it's been 10 years now. I'm just turned 40, and I think it was, I say close to 5 years. So I think it was just a little, somewhere between 4 and 5 years.
Got it. Perfect.
Yeah.
Perfect. And a question before, there's a lot, having nerdy conversations about venture that, we talk about that there aren't that many people that have the interest and the knowledge. I think sometimes you have one or the other. And then, but when you're at the bar, and as a bartender, do you eavesdrop on what people are talking? And if it's interesting to you, do you engage into some sort of extra thing? Because we all have moments like that in life. They don't have to be serving them drinks, but there's something maybe in an elevator or a line, or was it like that for you? And then I always appreciate when you take risk and you get rewarded for it.
Totally. Well, as far as I'm concerned, there's 2 types of people in the world: people that eavesdrop and say they do, and then people that eavesdrop and say they don't. So I'm happy to say I'm one of those people that fesses up to it. So yeah, you do that. I mean, I don't know. I don't think you're asking whether I was eavesdropping on Jim's conversation, but I do recall being
no, you know what I'm talking about. It's more kind of
on everybody.
I'm not. No, by no means. There are no traps here. It's more kind of just you're at this. For instance, today's Coinbase's IPO, and you're walking out and you're in a line. Someone talks about it, and you're you make a comment out of it. It's just us as monkeys.
Totally. Well, look,
kind of
I think you have to.
Yeah.
Honestly, as a bartender, I mean, it's you might make somebody a drink and have them be like, God, this is a shitty drink. I mean, that's something that maybe you don't address. But so anyway, you do, right? And I have no shame in saying I do. But totally. And there's some interesting things. And then there are times when you're just I just want to go home, man. I'm not trying to listen to this sob story or, whatever it is. And so there's a lot of times when you're sort of also a little vulnerable as a bartender, right? You're just sort of right there in someone's face, and you're, kind of trying not to talk to them, but they're the only person sitting there. But I'll tell you, it's an amazing place to have conversations. I'm sure you've been on, that side of it. And I think, as a bartender, you're actually like having conversations with all these people coming and going, and just in one night,
Yeah.
And so I always really enjoyed that. That was cool.
Nice. Well, and then just so we can, so the audience can understand the level of access that we're talking about. What's the story behind the firm, and what are some of the portfolio is very impressive in terms of some of the firms that probably today they've reached the top of the mountain for a venture firm, which is the perma oversubscription land.
Totally.
And it seems like Greenspring managed to carve itself out in many of those. So what do you think made that possible?
Yeah, well, first off, I think Greenspring has always had incredible vision, and going back to its founding. So, Ashton Newhall is the founder, co-founder with a partner from Europe that has since kind of exited the business. But Ashton, started, well, at the time it was actually called Montague Newhall Associates, and then when his partner left the business, then we changed the name to Greenspring, and I was there during that time. So Ashton, incredible vision at a very young age, I think saw an amazing opportunity, which was at that time, there were fund of funds, and actually fund of funds were sort of, like a little frowned upon actually. And on both sides,
by the
LPs didn't like,
right?
the sort of two, double layers of fees, but by GPs too, I think a little bit, it was sort of like, we just don't know, like how committed we are. And I think that there was, all sorts of dynamics that probably I didn't even appreciate at that time. But the thing that didn't exist was like access to boutique venture capital only. So you had fund of funds that, you could come to and get, access to venture and, private equity buyout, and private equity real estate. But it was very difficult to get access only through a fund of funds to early stage venture capital in the US. Right. And so that was really, I think, kind of the beginning of the genesis, or the genesis itself. And so Ashton grew up, Ashton's dad was Chuck Newhall, is one of the founders of NEA. And so grew up around venture capital, and I think
that's why it's
certainly
in DC.
had.
It makes sense now. That was another. I was like, what's
Totally.
the deal
Yep.
with Virginia?
Yep.
And very few people know that NEA started in Virginia.
Right.
Yeah.
Yes, you are well learned in venture for that.
I'm a venture nerd.
Yeah, and actually NEA still has an office in Baltimore.
That's
and,
right.
And there aren't, too many people there. But yeah, so, I think Ashton just got it about venture, and he grew up around it. And I think that, the relationships that he developed in growing up around that, I think were, tremendously important. And I think that there was some element of, he was, I think, 26 when he started Greenspring. And I think that when he, first sort of started talking to LPs about it, and he was saying, look, like, if you want access to early stage, US venture, I've got it for you. I think there was a little bit of like, good luck with that. Yeah, I'm sure you do. And, I think that, enough credit cannot be given to him for, kind of going and getting it and coming back to him and saying, like, what do you want to talk about now? And so then it was, sort of off and running. And you're talking about like, when I first went to work there in 2006, the commitment I think that we had just made was to Accel Partners 9, which, there's sort of a hot topic of like, what are the greatest venture funds ever?
It's the Facebook Series A fund.
Yeah. Facebook, AdMob. It's just like
I co-invested a few times with Kevin Efruzi. He's the guy that many people say saved Accel because they weren't having the best, like the greatest performances, right? And then suddenly they sourced like a deal and it changes the entire trajectory of the organization. and it's and he's an amazing guy. Just so insightful. I also shared a board with him, and I learned tremendously from that guy. And he did Facebook and Groupon. That whoever invested early made money.
Yeah, totally.
It's
I mean, so the list of managers they had access to was just incredible. And while I was there, we got into the sort of few that we didn't have that were on the sort of wish list were all pretty much knocked out during that time. And since then the story has just grown, and it continues to amaze me. I mean, this sort of vision is pretty incredible, and frankly, something that I think at the time, as a sort of junior investment guy, you just don't appreciate, and now in hindsight, I mean, especially, with you asking the question, I think there was just incredible vision, and it was always sort of a step ahead. It was, the separate account business is, big business, bringing in big, foreign LPs to kind of get them access to certain things, and then kind of make your way into introducing them to go direct. I mean, there's growth funds. There are, they're now, my understanding is that they're now raising their second kind of ESG and impact focused funds. I think they were, a little bit ahead on that. And, it's incredible, man. I mean, it's just a really cool way to have seen venture, because the thing that was really cool was we were primarily early stage GP focused. Like, we wanted the sort of top tier of early stage US venture, and then really kind of what I think there was a big story in was that we are going to use technology to identify like the sort of later stage candidates in these portfolios that we are going to proactively offer to make direct investments in. And so that strategy was very effective. It was also the sort of light bulb for me that where there were opportunities in the market for technology to not only play a role, but to also sort of create kind of differentiation for managers. So got to make a whole bunch of late stage investments alongside a lot of those people, a lot with OpenView, for example. I love
OpenView.
And so
we were looking at the co-invested with them at a company called Pipify. The CEO of Pipify LSU is an animal. Is a great inevitable founder. He's phenomenal. One of the best people I've ever worked with. It's my very first also venture investment, so it's dear to my heart. And unfortunately, it's on a great path. And the work ethics of that firm, and the fact that they are so good at what they do and are based in Boston,
so good.
Is there's one thing that OpenView does that I'm so impressed. It's the I operate as an investor at a very tactical level. This was something that Adian from Felices inspired me, and I told him I was going to steal that line from him. So give him proper credit, so he knows I continue to.
And you have, yes.
But it's a limited amount of favors, but only one at a time. But then you keep a scoreboard of everything you've done for that company, and then it comes time for the next round, you want to do super pro rata. You don't need to have signed documentation for that, because ultimately you've had enough judgment to just partner with the right people that will reward you for your hard work. So much in our business happens through trust, right? And I think that over time, I continue to see this founder talk so well about OpenView's work, and he's and the decks that they put you, it's incredible. It is one of the best. If I had enough, I would be an LP there, happy LP there.
Yeah, no, well, it's like one of those firms that the brand is obviously tremendous, but they're not like flashy. No. They just do their thing, and they were very early on in doing their thing. I'll tell you a funny story. A couple of years back, one of our marketing folks was like, "Hey, I've got this like media piece that I want you to write. Or are you interested in writing it?" And I was like, "Well, what's the topic?" And the topic was like sort of what has happened to, the IPO, like what's going on with the IPO in venture capital or something like that, right? And I was told at the time, I was like, well, who's it for? And she was like, oh, it's for Business Insider. And I was like, okay, cool, that's awesome. We'll write this thing. And so I write this, this piece on it, and then it comes back from the editor, and I didn't really see any of this, but she was like, hey, the editor loved it, like literally changed like 3 things. Don't even need to tell you about it. I'm like, sweet. And so then she's like, it's going live this day. And so on that day, she's like, oh, it's so weird. I thought this was Business Insider. And she's like, it was OpenView Venture Partners. And I was like, what? It's still like one of my proudest accomplishments. So they took it. It's on their blog. And the short and sweet is that I made the case that the IPO, and this is how you can find it, the IPO.
Oh, we read it. It was shrinking.
Yes.
Oh, yeah, we prepared. Yes. We do our homework. Yes. Sorry, I didn't mean to cut you off. It's just that I got excited.
No,
you were quoting what is in.
Better. Yeah, you put the words in my mouth. So, yeah, the IPO is effectively a dinosaur. It hasn't gone away entirely. It's just kind of evolved into something different. And it was still like one of the proudest things ever that OpenView put that on their blog. So if you looked at their Google Analytics, I bet I'd make up like 75% of the visits to that page.
That's amazing,
too.
That's great.
Yeah.
No, that's awesome. Coming back to the Greenspring life, yeah. I think his name is David. I forgot his last name, but the founder of Top Tier Capital.
Mm-hmm.
And let me see if I can.
If you hadn't asked me, I could have told you.
David York, exactly.
Yeah.
And then, so I lobbied with him alongside the NVCA in DC. It was one of my favorite trips, and it's just so interesting. I was the most junior investor there, and then it's surprising to me to see Greenspring, Top Tier, and some of the other fund of funds that it all seemed very possible at that time, but today, would that still make sense, right? One day I plan on being successful enough to run an organized fund of funds, and I know already there are a few people doing that. They're trying to apply the Y Combinator concept for emerging managers. I just think that represents a massive opportunity. AngelList has some stuff there, and it's very interesting to see where we are today versus where we were back then. So I don't know if you have any thoughts about if you were to start like a fund of funds today, how would you do it?
Yeah, that's actually an amazing question, because I don't think that I have necessarily explicitly thought it. And so you're going to get something kind of a little raw here. I think that like Greenspring arguably survived through what was probably actually a very difficult time for fund of funds. And I don't think it was as clear at the time it is now, what we were doing to evolve in real time. And, all of those, there were many things, right? And those are less important. I think that the point or the outcome of them was in all cases the same, which was be a valuable partner. And so I think that that's a pretty generic thing to just say, and I think even at that time we were, to your point earlier about sort of, measuring and keeping track at least of sort of things that have happened and maybe outcomes that were tied to them. And so that was what we were doing. We were saying being very clear to GPs about here's what, we offer, or here's what our relationship up to this point has done. And that's why we think that, we should get a bigger bite size out of this fund. And so, I think that remains strong for me 10 years later is, being a good partner. But what does that mean, right? I mean, it's pretty generic in the absence of being able to say it. And so I guess now with the viewpoint that I have, I think that there's, and this is just sort of a, catch-all answer really in this market, because at this point, like, working on the technology side of it and looking for opportunities, it's, it's bound to be something with technology. And I'm really obsessed with this idea of what has been called, and I didn't coin it this, and I think it's a little awkward for some people. I happen to like it. So, which is like Tinder for alternative assets, right? In the context of like making matches with people who want to, find each other, but which, right now don't have an easy way, right? And so introducing LPs to GPs, introducing, sort of whatever. And so, I think that there's like, if I were to go start a fund of funds right now, and you're catching me sort of, answering off the cuff, I think it would be the combination of two things, like really focused on like a value add relationship with proof, and that probably it would take the form of like technology driven ways to kind of keep the GP happy. Like, here are LPs, like let us sort of use technology to not only kind of facilitate these things, but also to kind of come back to them and look at them on the scoreboard and say like, hey, this is like what we did for you. Remember all that, great, all those great things. So I think the same is true on the flip side, right? Of like, which investments are you making? We were always very data driven, and Greenspring remains it, and much more so today. But like, I'm convinced that we're headed for a world where, algos are making most of the investment decisions in the end, or not, that's going to sound ridiculous to some people. What I mean is that the edge to find new managers, their underlying assets.
That I agree.
Whatever.
I agree. It's like, basically high quality, high fidelity, top of the funnel qualification. That where you are, but then you got to get human. But the top of the funnel can totally be identified and automated. And to your second point, I think you're spot on what will be created as a next generation product. And I caught up with him a week and a half ago, and we're doing a deeper catch up soon. And I really, really respect him and like that guy, Samir Kanji. That was at First Report. He started this company called Allocate, which it sounds like something like that. And for me, someone that, I've raised money from extremely organized institutional investors. I've also raised money from people that were just very successful entrepreneurs. They're just rich. They've never invested in the asset class, and I had the privilege of them trusting their capital with me for the first time when they were doing venture. And certainly the first profile in many ways is better, but there should be a systematic product, just like how you open up, your app, whatever app today, and you can buy a stock or you can buy crypto. Mm-hmm. You should be able to become an LP in whatever you want, and someone qualifying that for you. I did not grow up with. I didn't grow up poor, but I did not grow up with a lot of money in Brazil, and I see some of the investment decisions that my parents make sometimes, and I get very frustrated. So now I've been helping them a little more actively, but the democratization of the asset class with the automated discovery mechanism, I think it's basically the super product, in conjunction with a community that helps all the investors that are starting firms or scaling firms continue to be good people. Because, what made me believe that I could be a successful VC was when I was working at FCVC, a Funders Club, and I saw that the top 10 firms continue to be the same top 10 firms, top 15 firms, because they hire maniacs that are healthy workaholics, that are obsessed about the craft. And they're not just there for the money, they're there for the game, and that's the motivation. But then the minute that you continue to drop off that echelon, the work ethics, they do change. You start having way more ego and just people that are connected with the business in a different way, which continues, in my opinion, to make it very possible for a bunch of different managers to rise and shine.
Totally. Love that. Well, and like, so for, recent history for us, right? I mean, we have a presence in, enabling sort of external, we call it a lot of things, but at a simple level, like enabling external engagement, right? So we're sort of saying, okay, well, you need the things that are sort of keeping track of what you're doing internally to find, new opportunities and find LPs and all those sorts of things. But really, like, the sooner you can get to, actually creating some real estate outside of your organization that is technology driven. Now, I've used the analogy of like, the LP-GP relationship. I think there's going to be a part of the market where, to your point, like, you open an app on your phone and, you get there. But like, for the big sort of institutional relationships, like, I've used the analogy that it's a little bit like a marriage, right? I mean, you don't sort of get married on Tinder. You're really there to, like, sort of, put in your things and then have it match other people, or at least kind of estimate who you match with. And then you kind of have some choice, and then you go on dates, right? And so I think that there's a part of the market that's super interesting in terms of, like, if I'm setting up like a data room and I'm a GP, like, don't you just, it's like it's so limiting, psychologically, to think like, okay, well, like, we're going to have to go find these people to invite to it. When the reality is, like, there's probably a whole bunch of people out there that would love to see it. And seriously, like, they would actually take a good look at it. And that's what's interesting to me, is like, how do you start to get people who would, like, you wouldn't have to do, all the work. Like, if you've already got it all posted up and set up and they want to take a look at it, like, let them sort of swipe right or swipe left type thing,
Yeah.
And then, there's some sort of meetings and some dating and whatever, like, and then you get married. But the role of technology and it, I'm like, as we sit here right now, like, none of these things are really happening at all. And so that's the point, is like, come on, it's not going to stay this way. It's going to change for sure.
I do think that the proxy of that today is the ability of being creative and insightful with content through social media. It's this generalized thesis that, influencers are becoming investors and investors want to become influencers. It's a wide spectrum. You can have Sequoia and Benchmark partners trying to out-meme each other on Twitter, all the way to people doing, frankly, doing what, we're doing here, which is a different approach, but you're, to try to build credibility and notoriety in a different way. So that discoverability gets a little bit easier.
Sure.
But I think that the question here is, you don't want to be in a situation where, let's say Cambridge Associates, for instance, right? I've met with them a few times, think they're great, being in the business for so many decades and so forth. But it's a very conservative way of, like, trying to figure out who is next or who's coming, up and running. And it has wonderful product market fit for them, and it works really well. I want to be in a position where, because, I love learning, and things are happening so fast that in a situation, let's say 5 years from now, and I'm in a position where, Atman has a fund of funds, I love to have a fund of funds only for, 19-year-old kids, and give them money, and we and let them invest, because we think they're brilliant, they're very motivated. In how do you find them, right? Like, where you get the original data source, right? Because I remember, for instance, when at one VC we did a bunch of growth, and we continue to do this at Atman as well, just a bunch of late stage SPVs as well, as a marketing instrument to actually raise more capital versus just being that manager that says, "Oh, trust me, give me money." It's like, no, I have an exclusive opportunity that very few people have access, and I have a fund. Would you like to talk, right? So start getting inbound from a bunch of large hedge funds. This was, I think, before the whole, the trend was happening, but it wasn't as evident as it is today with, Kuchu, D1, Tiger, and so forth, kind of like investing everywhere. And I was like, the guy was basically, if you have access and you're structuring a very large SPV, almost like what Industry Ventures does as well, right? They're like, I'm happy to fund the whole thing. I manage billions, and, frankly, the returns in the public markets aren't the same as they used to be. So I got to put money to work. and I was, how did you figure out that I existed? I asked him that question, but to your point.
I love that question, just in the abstract, right, with no context.
Yeah, I was like, "Where the fuck did you find me, man?" And then, and funny enough, our offices in San Francisco were across the street from each other. I kid you not.
No way! Wow. It's that sort of stuff, man. Right? Like, come on. And so, like, the things that technology are doing at scale for the world right now, and that's not in it. That's the thing that for me continues to be like, there's a huge problem to be solved there, and it's going to be solved, right? I mean, we're in many ways working on solving that.
Exactly. Yeah. And the answer to his question was that he leveraged the PitchBook API, trying to find the entity names that would say anything such as growth SPV or what, and then he just combined with a bunch of different tag words and so forth, and then he had a list and just pinged a bunch of people, assuming that these guys are probably seed investors that are very hungry and they're good because they managed to get access. Like when we were doing some of these SPVs, we were taking allocation from Andreessen and Tiger. Anyway, but then
cool. Yeah, no, I love
that. You were there for 5 years, and it was a transition to the role at Altvia, and also I would love for you to just tell us a little bit about what you guys do, because I was fascinated. I've never heard of the product before until we were researching. And full disclosure, I think you guys were great in the first phone call by explaining the price tag that for smaller firms it's harder to afford. So today we run an affinity with the hopes of eventually having another conversation and checking the product out. Also because if they have someone like you there for a decade plus, I'm very interested in learning what you guys are building.
Yeah, well, I appreciate that. Thank you. So the way that we kind of phrase it, and it's definitely a case of like, it's been a big vision for some time, and in many cases along the way, it was like, how do we tell people that? My mom thinks we fix printers or something. We work with computers, and so the best way to describe it is, I think, like, we want to truly kind of transform the way the technology is sort of the role that it's playing in this market, and across the board, like with LPs, with GPs, with intermediaries, and then with portfolio companies and underlying assets. And what the opportunity we see is that sort of, this market, not just venture, but, buyout and other sort of, segments of kind of alternative assets are disproportionately responsible for all sorts of, kind of innovation, certainly, but as well, the returns that we all are sort of, beneficiaries of.
There's more. I'll give you even an NVCA talking point. 2/3 of Americans that have healthcare actually have it through a company that raised venture capital in its history.
Yeah, totally. I love those, because when we would write, thought pieces of Greenspring, they're punchy. I mean, like all those statistics, you're like, holy shit. Can that be, like, is that a typo? And no, that's actually the point. So thank you for that. But yeah, I mean, so we see an opportunity for that to be even more efficient, right? And so whether it's like, applications and software that is helping you be more efficient internally, or whether it's, software that is helping you, like we're talking about here, like actually, open up and enable opportunities that you otherwise wouldn't have with the people somewhere in that ecosystem, right? Whether it's, a capital source, or whether it's finding an asset, that's really what we're doing. And so it takes the form of, kind of traditional categorical, things like CRM and portal and, stuff like that. But we're really focused on, a big vision of kind of just changing how technology works. So in many ways, the conversation we've just been having. And so the path that took me here was, so it goes back to about 2008 or so. I was still at Greenspring, and really early on in my time there, when I first went to work there, they were using Salesforce.com, and they'd worked with a consultant prior to me going to work there, and they were like, "You're like the newest, most junior guy. Like here, like figure this out." And I was like, what? I have no idea what I'm doing. So I ended up kind of managing this thing, and then it was very clear to me very early on that like this thing was powerful in 2008, Salesforce.com. There were a lot of people, in venture and GPs that were using it, but it was like, it just was kind of like not really, getting there. And so I was introduced to Altvia's founder, Kevin Kelly, who had just prior to this been spending, time at RCP Advisors, the lower middle market buyout fund of funds in Chicago. And so he was sort of playing like an outsourced CTO role there, and much more explicit in like, choosing systems for them and stuff like that. And he had ended up with Salesforce, very quickly said, hey, like there's a much bigger opportunity here. And so the opportunity was to actually sort of take the power of Salesforce as a, technology platform, but, not have to go through that sort of consultant, like, model, and instead go through an application layer that like was punchy and market driven that worked in this market. And so when I was introduced to him, I was like, ooh, this is what I've been looking for. And
it's funny. My definition of a Salesforce is it's basically it's the ugliest, clunkiest product that you must buy as an organization. And I think that the way that the whole thing was set up was because Mark Benioff was probably mentally inspired by the sheer aggressiveness of a guy like Larry Ellison back when he was the number one guy on Oracle, listening to his Tony Robbins tapes and said, what, I got to get out of this and start my own thing. But I need to run my own kingdom that's going to be a dictatorship called Salesforce. And then I basically provide corporate lobotomy on every customer, and we all get together in this big church called Dreamforce every year. I bring Metallica and Deepak Chopra, so people think that, and it's crazy. And you see, like at SendGrid, a few clashes that I've had internally were with the Salesforce administration people, because they acted as if they were a dictatorship within the company, and our installation at some point looked like an ugly Christmas tree. There were just so many things attached to each other, and it was such a mess, and you can't do anything. As an individual contributor at the application level like you're talking about, you can do nothing. You don't have any freedom, and you want to buy it, and you got to buy it through the reseller, and it was a revolutionary model, and I respect that company immensely, right? This is no disrespect, because it takes a complete level of like determination to sell such a horrible product so well. And congratulations, to them on that. I think that, the App Exchange and the Apex language and everything they've done, incredible organization. It's a very inspiring story. But the product, is a problematic product. And,
totally.
So just to validate your point, I have strong feelings about this.
No, listen, hey, I mean, you're not the only one. I mean, there's nobody that feels like, oh yeah, it's kind of, I mean, like if you've never, used Salesforce, then you're sort of like, oh, I have no idea. But, if you have, you feel one way or the other, and most people feel the way you do, and I get it. And we actually, for the better part of, several years, were the beneficiary of that, right? Because we were sort of saying like, well, all right, like, and we literally, every year bootstrapped, just had so many firms, and the word of mouth thing was great. I mean, it was like, oh, like these are the people that figured it out. So that was how I first met the company. Was like, this is what we need, and so I, by that point I left there early in 2011, and by that point I had started, mostly working on, kind of some of the later stage direct investments that we were doing at Greenspring. And like I said, co-invested in a couple of cases alongside OpenView. And in a lot of those cases was a board observer. And so I was starting to become like, and still remain today, absolutely 100% obsessed with, the entirety of venture capital. And, the viewpoint that I had was really cool one. But I started to realize like, the thing that I'm obsessed with is building companies, right? And so this is a way to sort of, have a purview into that. But like, it also was like, man, like, it'd be really fun to build a company. And so it was early in 2011 that I think all of the things sort of clicked. I wanted to get back to Colorado. And here's a funny story, actually. It was a hard decision for me. I felt like I was sort of leaving a dream career. And, but I really worried more about my girlfriend at the time. And so we had to figure out how to both get back here. And so one day, like, we hadn't even kind of put the wheels in motion, but one day I was on a reference call with a founder here in Boulder that had just started a company backed by Foundry Group. And so it was like Foundry's 2009 or 2010 fund. I guess it was 2010, 2011. And I was on a call with him. And telling him about, I know, a little bit about what you guys do, because my wife does this. Now he's like, who's your wife? Where she worked? Flew us out to Boulder, I think literally that weekend. It was like a Thursday. We were in Boulder that weekend. And by the time we left, Sunday night, he was like, your wife's coming to work here. So that was actually the path that kickstarted the whole thing. And then it was just very clear that, like, I felt
so
like
your wife works at Altvia as well?
No. Sorry. That was confusing. She went to work at the company at the time, was in stealth mode, but became Link Smart and was backed by Foundry Group.
Gotcha. Okay.
Yeah. So she kind of, one up me. I was worried about finding her something to do for work. And all of a sudden I was like, sort of scrambling. So we did kind of the long distance thing for like a couple of months at the end of the year. And it just started to kind of emerge. And if Kevin is listening or hears this someday, I mean, Kevin ultimately one day, asked me the question, like, would you want to come to work here? And I hadn't really given that much thought, but it was almost in that moment, it became clear that, like the problem that I had been suffering from, at Greenspring, like in the absence of some of the technology and what I saw, some of the opportunity, the desire to kind of want to be a part of building a company and having it be in Colorado, it all just kind of clicked. And, there's times I joke, it's like, it feels like it's been, 20 years. And there's times when it feels like it's been, 20 days, but that's just what we've been doing. We've just building, products. Get back to the Salesforce thing. In many cases, what we've done is said, like, Salesforce doesn't do that or doesn't do it well enough. So we're going to go build our own, assets around the periphery with the goal of just building a sort of full platform for the market that, solves problems internally, enables external engagement, makes LPs happy, all those sorts of things. And that's what we've been doing. So
that's awesome. Okay. So walk me through then, Jeff, like some of the things that Altvia does that your traditional CRM wouldn't do it, because the whole I didn't get to see a demo, but basically the clients that you guys have already validate, right, and speak, like they give you guys tons of validation. If you name drop some of your customers as well, please feel free to do it. And by the way, none of this is sponsored or paid. This is a podcast for, founders and venture investors that are nerds in that sense with what we do. So I'm curious, because I've been an Affinity customer for probably like 4.5-5 years or so. Sure. I like it. It makes my life easier. I used Relate IQ before they were acquired by Salesforce. Yeah. I think that one of the things that apparently is a big difference is that you guys have a big thing on managing the firm, and then as you start having a bunch of different vehicles, it's a very painful thing, and certainly a tool like Affinity can't do that. So just I'd love to learn more, like, what's Altvia we're not just a CRM, and how is it that works at the tactical level, and some of the customers that, if you can name them, that have been using some of these features with actual examples. I think that would be cool.
Yeah, totally. So to start off, I'll kind of give you a sense for some of the folks that we're working with, and we're extremely proud of our clients and our partners. And, in many cases, they had this sort of faith and trust in us as a, very young company at the time. And we're tremendously grateful for that. But, there's a bunch of folks, obviously, in this sort of, Greenspring community, NEA, TCV, Lightspeed. There's a whole bunch of customers that I also can't, or not supposed to name. I think people think that there's sort of some secret sauce going on, and frankly there is. But Khosla, and now you put me on the spot. I'm like, oh, what are the other ones? But like, on the buyout side, there's, like Little John, Wimpoint Partners, and you can always go to altvia.com and see many of these logos.
There's a buyout firm called Little John.
Yes.
And
they're amazing. Yeah, they are the real.
No, sorry. I know very little about that market, but I think it's
totally.
What an interesting name.
Yeah, right. Like
for buyouts.
Yeah, exactly. Little John and Co. And yeah, tremendously good at what they do. And I was, saying I've gotten to know a lot of these, buyout firms now, working with them, but sort of had no idea. And we think like we'll put our client roster against any of our sort of peers, and we'll take it. So I think that like what we're doing beyond
and also.
CRM,
Sorry to cut you off. I wouldn't consider even Affinity a peer just because of the size of the contract, right? The tool is it's a whole nother level. That's why in the beginning of our conversation, I named you guys the Rolls Royce of venture infrastructure, and maybe they are and with them maybe we're buying a BMW Series 3 and they're working very hard to build a Ferrari. So it's different categories. Just true.
Totally. Yeah, no, and look, I've never been one, to sort of, knock competition. I respect them all. I think everybody at the end of the day actually is, a little bit different, and there's some salesmanship and all that stuff. But yeah, no, I mean, there's an important, role I think that Affinity plays, and we, in many cases compete with them. But I'll tell you, there are people that I myself have said, like, I actually think Affinity might be a better fit, to the implied point that, like, maybe they're not quite ready for sort of some of the stuff we're doing. But, I think that what, CRM's important, right? Like, we actually have a podcast episode on this, and I think it's laid out there, not by me, but by somebody else really well, which is like, categorically, all businesses, sort of, especially B2B ones, have more or less the same functions. CRM is a part of it, right? Like finance is a thing, like, ERP, HR, type stuff, payroll. And some of these things are like super important from the perspective of like, you cannot mess them up. Like you cannot like mess up your finance system, right? But it's not like a strategic weapon. And if you look across these sort of technology stacks, oftentimes CRM is sort of more of where the proprietary stuff's happening. How are your reps, reaching out and engaging, prospects and things like that. And so the CRM components for us, are pretty straightforward. We're going to handle like raising capital, the whole sort of solicitation process, if you will. Sounds like almost like a dirty word in this case. But raising a fund, deploying it, and keeping track of investment opportunities and all those things. Where we're really, really different is, I think you sort of mentioned it, Pedro. It's like this. We think about it a firm life cycle, and we think about it as like when you raise funds, it's to invest them, and then you invest them so you can report on them, and then you report on them, and also then need all of the information that was generated, all of the exhaust in terms of data that was just generated is all going to come right back to the starting point again, because now you're going to need to tell all the LPs the next time you raise capital about the thesis, how you delivered on it, what you're good at, what you're not, how the assets are performing. So a big part of my experience at Greenspring was like, this is a circular process. And, the data that is in it at any point is sort of the same data. It's just kind of cycling through, different motions in different stages. And so the way we've looked at it is like, we want to be the best at everything we can be. I was just telling, a coworker the other day, like that, I occasionally worry about like the desire to be like the absolute best. Like sometimes I'm like, I know this is like a thing a lot of people do, but maybe it's excessive for me. We want to be the absolute best at something we're going to do, or we're not going to do it. And so we don't really do like, don't do like HR. We don't do finance, but where we're really differentiated is we're sort of creating, and this, I think I've been laughed at before. I'll risk it again. I've almost compared it to like, we want to create the rotating sushi bar that is delivering data throughout the firm to the people that need it, you know? And so like, there may be a need for, well, and there's definitely a need for accounting data to be on that, you know, sort of conveyor belt, but we don't have to be the application that's generating it. And so a big part of what's unique about what we're doing is being able to access and put together that full picture of the data that somebody needs. So it's like, hey, well, like I'm an IR person and all I'm getting questions about, you know, the performance. Well, you know, traditionally a lot of firms, even still today, are like, oh, we have a team of analysts that will take 3 weeks and they can tell you anything, right? And the future we envision is like, all you need to do is reach out and take that piece of sushi off and eat it. Like, and if the next person needs it, like there'll be one right behind that. And so it's really about organizing the data so that it's free flowing and available to the people that need it, including, you know, I guess the analogy breaks down at this point, but including to the point that you actually want to begin to enable an LP experience that involves some of that data as well. So you're not going to sort of send the whole conveyor belt to them. But if you wanted to say, hey, like, well, let's let them access their account data, or let's let them see visually in an interactive experience where the portfolio has been invested and how it's doing, then, you know, that once you've organized your own data such that anybody can access it, it's actually pretty straightforward based on all of the information you would have in there to actually very quickly enable like your LPs in a certain fund to see a dashboard that does that. So that's a big part of sort of, you know, how we're organizing the data that we're generating in our applications, as well as the data that we're not. And then the other thing that kind of really differentiates us is that we have, you know, in the sort of portal kind of data room segment, we basically sort of took the approach of like, throw it all away. It's all bad. Yeah, I feel I spent years suffering and being tortured in portals as an LP. And so we built a product several years ago that we said, like, what if we just totally like actually reimagined it, you know? And we just said, like, let's just imagine what it would look like for an LP to use this application and be amazed at how easy it was and how elegant it was. And let's just bet on that will get LPs talking to GPs about it, and GPs will be like, well, I have to have this thing. And so that's a big part of you know, kind of where we are strong is the enablement of the LP experience. And it turns out that sort of conveyor belt of data feeds that experience directly to the LPs, and big part of why they love it. So this is a little bit meandering, but yeah.
No, but I think that, you know, oftentimes emerging managers, and I will be an emerging manager until I die, just because, you know, so I like the Jeff Bezos day one philosophy, but there's something to be said when, you know, when I left one VC, at that time I had done probably already like maybe 60 plus investments in venture between my time as an associate, all the deals that I led at the firm, plus the up rounds, and some were through what you would consider a core fund, and many of the others were through SPVs. I've done many SPVs during my venture career in all the places that I either started or worked at, and since I've left as well, I've done a few already. So it's a very helpful mechanism in many ways. And the issue, though, is managing all of it. So it was very messy. So I've used Assure. I've used AngelList. I ran SPVs on Funders Club when I was working there as a client of Cornerstone Fund Services. I've used Carta. So let's try them all. And we decided to leave Cornerstone and go to Carta because of the portal. That was the only decision. The folks at Cornerstone are great. They're awesome people, very responsive. They're great. It's just not, you know, just not software people. They're not. It's not a tech company. It's a fund management.
Service driven. Yeah.
Service. Yeah. So the combination of both are, I think, just really important. And the complexity of having multiple vehicles during the life cycle of the firm, which then I understand why your contract size, you know, the price for Altvia is higher, because at that point, you know, when you have that level of complexity, you probably can afford the price as well. So that isn't even a problem.
Well, and the pain, right, you know, gets more severe. Yeah. So yeah.
So but what do you think it's next then? in terms of because it is getting a little more competitive, and
Totally.
I think that you got a bunch of the old players trying to do tech. And frankly, I just ran an SPV on Assure, and the amount of bugs I found there, I'm happy to say this on the record, they're great at service, but they're going through a very painful process of scaling right now.
Yeah.
They're great people, but they are in pain. And frankly, the quality of the software there, it kind of gets the job done, but it's not beautiful. So, and then you see other new players just doing that type of stuff almost at the API level. And AngelList as well, I think, has matured tremendously. So it's interesting. I think that we're getting into a point where so much technology is finally being applied to the asset class.
Yeah, exactly. And I think that's historically here's my thesis. So historically, the sort of like if you were to do benchmark analysis, take Cambridge, benchmarks, and you said what's the disparity between like upper quartile performance and lower quartile or median? Then the disparity, like in the early days of older vintages, in the early days of my time at Greenspring, for older vintages at that time, it was like, oh my God, like you cannot, you have to be in the upper quartile, right? And you were just completely running away. And there's been a lot of compression in that, now. And so it's a number of things. I mean, brands are still relevant, strategies are still very relevant, track records still very relevant. But you do now have I think, much more creativity in terms of how people are approaching being differentiated. I don't think it's a coincidence that Silicon Valley banks to the wine industry and to venture capital, because I think that they're the equivalent in terms of kind of doing mostly the same thing. Like, what's the story? Because you don't know what the returns will be in the fund, right? You can never invest through the front mirror or through the front windshield. You invest to the back. And so, there has to be compelling stories, and certainly being in the top quartile consistently is very compelling. But when the compression happens in those returns and you don't know what the fund will be, then the story becomes more relevant. And so what you've started to see is firms that are actually paying more attention to a differentiation story that isn't just about, performance. And I think we're now living through a period where those stories are kind of getting a little bit tired to the extent that they don't use technology somehow, right? So let me give you an example. Like, you're talking to somebody from Bain, and he was, he's largely agreeing. He's like, you hear managers and you're sort of like, well, what makes you different? It's like, well, we've been investing together for 15 years. And it's like, that's not that different. So is everybody else. Like, I just had 5 people in here saying that. Well, we have access to unique deal flow. Well, what is it? Well, it's proprietary. Okay, well, if you can't really tell me, it doesn't really seem like you do. And so that for a long time, the market got away with that, as differentiated. It's not. It's just not.
It's
right.
Not, no.
And so, now people are starting to use technology to actually differentiate in terms of how they find things and how they make investments. But here's the real thing about how they provide customer service to their investors. And for me, that was always the thing, obviously being on the LP side, where it was like, yeah, man, I mean, it just kind of is weird that I could log into my brokerage account or my 401k account. I can see everything about the money that is in there. And yet we've committed $50 million to this fund. And I'm having a hard time getting a response to get a quarterly report, And so the competitive dynamics, we bet that they would always sort of start to head to a point where differentiation was better found in technology. And that's happening, to your point now. And that's where all the companies are coming from to take advantage of. And there's so much consolidation now happening. But the fundamental driver is that firms are actually buying more and more technology, because it like Schwab. I got a notice the other day, and Schwab was like, oh, we're now integrated with your Google Home. So you can hey, Google, what's, my Schwab balance? It's like, no one wants to do that. But guess what? they have to differentiate and appear to the, it's a B2C model mostly, right? So they have to appear to the consumer as though they're like keeping up with the thing. And now that's more and more important in B2B and in this market is show your LPs that you're actually sort of providing customer service and experience, and that it's technology enabled, because that's a compelling story. Sorry, you
Absolutely.
wanted to jump in a couple times, and I just
not
I get
a
very
problem.
passionate about it.
I love it because I think it's one of the most important aspects of the aesthetics of how you interact with your clients when you are in the money management and service business. And oftentimes, many emerging managers forget that in the end, no one gives a shit about the glory stories or the unicorns. They just want to have you made me money. That's what matters in the end. Like but you can do that in a very nice, sympathetic, unique way. But we are also managing capital for a living. So the ability of communicating the right way with credibility and providing a good level of service. I've always, my former manager at Funders Club, and now he runs a company called CodeCov that I was an angel, and then subsequently we invested it through one VC, and he says I made a mistake once, and I sent like something with an error to an investor, and I got called out, and I remember vividly that moment. He was like, "Look, people here, when we're doing things, they need to feel like we're changing the world, and also give them the credibility that their money is with Goldman Sachs." Like that's what he thinks. So he said something of that of those lines. But I don't know if like any of these investment banks have that much ethical credibility. But every 6 months there's someone doing something weird. Yeah. But overall, I think that there's a level of integrity, right? That you trust. It's like if your money is in Chase, like or it's going to be there. And some of these firms, they're really weird black holes. And a lot of the managers continue to be able to get away with that because there wasn't enough competition. And now, for me as a founder, because I am an investor, but of course I consider myself an early stage founder.
Yeah, like you didn't come through that Harvard Business School path, and all you've ever done is make investments. Yeah, totally. And I love that type of investor, by the way.
Well, thank you. Yes. Well, we were talking about, just to even go back to something we spoke earlier, right? When we were talking about the education, I interviewed over 54 MBAs. I went to classes at HBS, Anderson School of Business, GSB, Sloan, Columbia, and so forth. And all the students that I spoke with there in Wharton, they, on my dime, traveled to all these places and watched classes and interviewed all these students to really crack as like, should I get an M? Because I had this chip on my shoulder that I didn't have the fancy education that all my peers had. And the first time, I did this twice. First time I did this, they were all saying, "Oh, I would love to work at a venture-backed company that one day goes public and gets acquired for billions." Then that I had that with SendGrid. And the second time is like, "I'd love to get a job in venture," and I had that with the Funders Club. So I think that this is not to, I've invested in amazing people that went to these institutions, but going to these schools has no correlation with your ability to be a good person and be successful in life. Because I've invested, I have also fell for the Disney story of an MBA that is a horrible founder. Looks like a little beautiful Disney princess, and when it comes down, it's just like there's nothing there. It's just like it's a fairy tale.
Sure. Yeah.
So I don't think it's correlated in any way. But I wanted to be respectful of your time because you've been so generous already.
This is fun, man. There's nothing I would rather do, if I'm honest.
I appreciate that. I feel like we're gonna have a lot of fun, and I really enjoy I hope that soon we'll be able to do it in person. There will be a time when things open up. I'm gonna go to Colorado, so when that happens,
hey, look, we're going to Brazil together too. You agreed to that earlier, so that's happening.
It's happening.
When we open back up. Yeah, I'll come see you in Miami. Yeah, we'll do all the things, all the places. But no, man, I knew the first time that we chatted that we were going to enjoy it very much. And indeed we did. And we were sort of all over the place in a fascinating conversation that I love. and we're gonna get to do this again on my podcast. But no, I mean, it's just so fun, man.
I look forward to that.
It's just such an exciting thing, and the viewpoint, like when you ask me like what's next, it's like that question is so fun and also so frustrating and tiring and all the things, and I guess that's a part of it that you sign up for. But how will these things sort of play out? And I guess at the end of the day, like you were saying something that the almost had this sort of first thought for me ever, which was like, I guess in a way I'm a little, I mentioned earlier, I'm a little contrarian. I'm definitely a savage capitalist, and I believe fully in like, you sort of eat and survive, or you don't, you get eaten. And I guess in a way, what we're trying to do is not pick sort of who survives and who doesn't, but we're trying to kind of create a ecosystem or a habitat in which, the people that sort of, make the smartest moves, and that has to be part, like technology has to be a part of that these days. And so I love the stories of like, well, we're enabling emerging managers to tell a different story that, they otherwise couldn't, and they couldn't have raised the fund and stuff like that. So it's just so exciting to hear those sorts of stories. And a lot of times you don't necessarily get to put faces and names and all that and hear about the outcomes, but it never gets old to think about like that we're facilitating an ecosystem that's so important, and that we're like enabling people who might be underdogs and didn't come from, these sorts of backgrounds like I didn't, to do something, to have it be meaningful. And like, it's all the feels for me. I just love it so much.
That's great. It's beautiful. That's exactly it's the same level of intensity that all the inevitable, founders that we partner with have. And I wonder, just something that occurred to me, if you guys, have access to all that data, and I remember, this is, early days at Semper, I pitched the CEO, I was like, we have their email volume at the transactional level, so we know who's doing well and who isn't. And all these early customers, Uber, Spotify, Fitbit, Pandora, Yelp, Booking.com, and all, it was, why don't we launch a small fund that then became a thing with Twilio and Stripe and all these other developer tool companies investing in their customers? Yeah. So I guess my question is, like, when is Altvia launching a data-driven fund of funds?
Well, that's the topic I can't get. No. It's funny. We, so, the company up until last summer was entirely bootstrapped. And that, the sort of concept of like compensation, of each other, like, us and our customers early on, cash was pretty important to us, but there were so many times when it was sort of like, well, both sides, where we were like, hey, well, like, why don't we trade, a little something, like maybe a small commitment and, charge for the software. And then vice versa. We used to have, customers that, you could tell who was using their CRM well too, right? Because like they would every 6 months, they'd call us again. But even in the sort of sales process, like where they'd come looking for a, kind of CRM type stuff, and they'd be like, well, like, who's backing you? And like, well, this is it, like, you're bootstrapped. We were an early Techstars company, like in 2007, and that was the only outside capital that we took. And so, it was interesting. There was always that sort of thing. We take the data thing seriously because, at the end of the day, what I'm saying that we enable is like differentiation through data and technology. And, that there's always been a little bit of sort of, how do we, kind of want to dabble in that? Certainly it's something that, could potentially be done one day. I don't know. I can't say too much about it. But it's an interesting thought.
Yeah, if you are, do let me know. I'm happy to introduce you to LPs.
You'll be the first one to. I'll come on the podcast and announce it.
That's great. Deal.
Big celebration.
We have a deal.
Yeah.
I usually we end up with this like rapid fire questions. So ideal morning routine for you.
I at a younger age was more ambitious in the morning. ambitious, and now I just try to sort of get the kids ready, get them to school, and like I'm not trying to be too ambitious, so it's pretty, let's focus on getting them fed, clothes, car, done. Underwhelming, I know, but again, just trying to survive here with the kids. Yeah.
One day I'll have them. It's interesting. What is there's one thing that you started doing recently that significantly improved your life? It's maybe a new habit or something you bought, right?
Yeah. Well, you can sort of see behind me. So in the fall of last year, we finished our basement, and I put a little soundproof like music
see the
studio
beautiful
on here.
Gibsons there and the Marshall.
Thank you.
Yes.
Yeah, there's a little bit of a flex, and what the thing that I've gotten real into, and the reason I did all that was because I wanted to get into recording music, because I felt that I had like things going on in emotions and words and all sorts of things inside me, and that like bottling them up wasn't doing any good, and so I wanted to try to like get them out somehow. And so I've had to learn. I'm big on learning. I've had to learn a lot of stuff here, but it's been amazing because like sometimes I'll be up late at night, playing with something, and I'll wake up in the morning and I'll hear it. It sounds totally different, and it's like provides some sort of therapy for me. So that's kind of the thing that I'm geeked out to right now, is like taking emotions and thoughts and turning them into something that you can hear.
Very nice.
And I don't know that it's any good, but it's doing it for me.
Oh, it's wonderful. No, it is absolutely great. I guess I have it's the classical Peter Thiel question, and then for you, mention your contrarian a few times. So there's the one thing that you typically believe that others don't.
Oh man. So I'll tell you what it is. I believe that there are few facts. I believe there are facts, but I believe that most things are a matter of our interpretation, and that we don't actually, we've come to be taught and believe that they're facts, and so there are facts. But like I would challenge, and my wife, when she hears this, will get a good giggle, because it's like I would challenge like that the sort of shirt you're wearing is white. It's the color I see and I know is white, and probably the color you see, but there's no guarantee that we're seeing the actual same color. So it's controversial at times, but few things are facts to me, and I think it enables opportunity to have a conversation and understand each other when we can appreciate that we might not be seeing the same thing, or that it's not actually a fact. I think the world's gotten a little carried away with like this idea of fact, and in many cases it's, for me, interpretation being sort of pimped as fact, and I think it's dangerous. So
I love it. No, great answer. It's a very Alan Watts meets Carl Jung answer. And what's the
totally. And
interpretation
people
of reality?
they get so frustrated with that when I tell them that. They're like,
I love the answer.
It's like, what do you do with it? There's like, everything's just a gob and nothing's like solid, and is how they hear that. And I don't know. That's just how I feel. So
that's great. Well, Jeff, thank you so much. This was great.
Thank you, Pedro. It's amazing.
It was wonderful, and look forward for us continue to have these types of chats.
All of our travels too.
And all of our travels, we're going to have a lot of fun in Brazil, and when I come to Colorado as well. All right.
Totally. All right, man. Well, hey, thanks for having me. Really appreciate it, and look forward to catching up, doing it on mine, and then all of our travels. So until then, be well, take care of your people, tell them hi for me, and we'll talk soon.
See you, my friend. Bye-bye.
All right, man. Be good. Bye.
So there you have it. This was our wonderful episode with Jeff. I hope that you guys really learned tremendously with him, as much as I did at least. He's the first person to be involved on the other side of venture capital. So first non-founder guest, if you may. And we're going to start having more investors as well on the platform. So if you also have feedback or ideas of the types of guests that you'd like for us to have in these conversations, do let us know. I really hope you liked the episode. For those watching on YouTube, we're also available on all other platforms. So basically Spotify, Google Podcasts, Apple Podcasts. And if you like the content, leave us a review, give us a like, subscribe. We always appreciate it. It's a lot of work to put together high quality content, and we do it because we care. We do it because it's rare to have open conversations about some of the topics that we're talking about, specifically with this format. Thanks for listening. We really appreciate it. See you next time.